In this video, traders, my goal is to teach you how to effectively use candlestick trading patterns in your own trading. So stay tuned. My goal by the end of this video is to help you learn what candlestick patterns actually are, first of all, learn some powerful candlestick setups, and actually how to end up trading candlestick patterns like a pro. So again, first of all, we need to know what is a candlestick pattern to begin with. Well, in the 17th century, they were actually originally created by the Japanese to trade rice. And it's essentially a way to read price action. Here over on the right, you can see what candlestick patterns and candlestick formations actually look like. And they're very useful for using in technical analysis to kind of gauge what's going on in the price. So why do they matter? Well, candlestick patterns can actually sometimes leave some clues as to what the market may or may not be doing next. If used effectively, they can actually create some really profitable trading setups that give us a high probability of success when trading the markets. Really, they can leave us some clues that can be very, very useful. So looking here, what we have is we have a candle body. Now what this big green bar is, this right here, this is the body. And the wick right over here, you can see, is this area over here on the top and the bottom. So when we actually are talking about reading a candlestick, there's a little bit of information that a candlestick will actually give to us. And I'm going to break down the main components of a candle right now. So what you see is that we have an open, a close, a high, and a low. All of this is information that a candle will actually give to us as traders. And what you can see is this is an example of a bullish or a green candle, right? You can see this is where price opened. So right there at that bottom of the body is where the price opened, and it shot up all the way to where we closed. Now this is the close right here. You can see this little level right here is where the price actually closed. And now what you can see is that we just talked about wicks on a candle. Well, here are our lows, right? And our highs. So these wicks or price levels or extremes of this candle are where price was at during some sort of time. Remember, a candlestick can be any time frame. It can be 1 minute, it can be 5 minute, 15 minute, 30 minute, 1 hour, all the way up to 1 month in one candle. So what this is, if we're assuming that this is a daily candlestick, then what this means is that it opened here at the start of the day. We moved all the way to a high of this point and a low of this point in the day, and we closed right here. Now, it's a little bit similar, but not entirely the same when talking about a red candle or a bearish candle. So what we see is that our open is actually up here this time, right? Because what it means is that we opened here, we made a close all the way down here. So we actually moved down on this candlestick to where we closed. And our low of the day was here, and our high of the day is here. So those two things are going to remain the same, bullish or bearish candles. But essentially, when talking about candles, a green candle means that it was a move to the upside, and a red candle means it was a move to the downside. So we mentioned that with candlesticks, what's important is that they can actually give you some sort of interesting kind of clues as to what the market may be doing. But more specifically, they actually tell a story about what market participants are thinking or doing in the markets. And they can potentially give us ideas of what may or may not be happening next, right? So candlestick patterns are a series of candlesticks in powerful formation. So we just got done talking about, a single candlestick and identifying the anatomy of a candle, but a candlestick pattern is multiple candlesticks in a row, or some sort of formation that may be telling us a story about market environments or market participants. So our first candlestick pattern is going to be the engulfing candlestick pattern. Now what you'll see is that it entirely engulfs the previous bar. So again, here looking at the engulfing candlestick pattern, what you see is that we had a red movement, and then suddenly this candle completely engulfed the previous bar, right? So we had a move to the downside, and this candle completely covered this candlestick and showed some massive movement to the upside. So what does this signal to market participants? Well, what this is showing us is that the price was moving down and sellers were in control on this candlestick here. But suddenly buyers stepped into this market and really pushed price higher and completely reversed the market. So what this will often indicate, let's say that we have price moving down, right? And suddenly we get a nice, let's imagine that this is a red candle, and suddenly we have a big green candle come in and engulf that bar, right? So price was moving down, sellers were in control, and suddenly market environments changed when the bullish engulfing candle showed up and we saw some strong push to the upside. What this often will signal is that the market may be ready to continue to the upside and buyers may have actually gained control. Now, similarly, we actually have the same sort of setup when talking about a bearish engulfing candle. So what we can see here is that markets were moving to the upside and we had buyers in control of this market when suddenly a strong sell pressure came into the market and created an engulfing candlestick to the downside, right? So this is an example of a bearish engulfing. What you can see is that the previous bar completely was closed by this bearish engulfing candle. And what this shows is a similar scenario, but on the top side, right? So we have a market moving to the upside and suddenly you can see here's our green candle, right? We had a green candle here and suddenly we had strong market participants push price down lower and actually show some weakness of this trend and some strength to the downside where sellers would potentially be ready to continue. So this can kind of give us a clue as to what may happen next when talking about market environments and talking about, a potential reversal in the market. So the next one I want to talk about is the pin bar reversal pattern. Now the pin bar reversal pattern is quite a common one. You'll see it all the time in the market. And similar to the engulfing pattern, it's going to be a reversal pattern that shows potential weakness in a trend. So when talking about a bullish reversal pin bar, right, what we have is a environment where here is our open, right? We talked about opens. So price started out moving to the downside, right? You can see price moved down and wicked all the way to the low of the day or bar, wherever, whatever time frame you're working with, right? And this was our relative low. Now, what's interesting is that price pushed all the way back up, right? And not only that, but it actually closed higher, right? You can see we closed higher than we actually started. So here was our open, here was our close, right? And our low of the day, which was all the way down here, was not able to hold. Now, this can be a big indication for buyers, as what we see is sellers being rejected and buyers actually buying up this market and reversing price. So what's interesting about the pin bar reversal strategy is a lot of times you'll see a market moving down and suddenly you have a market environment where a bullish pin bar may print. Now, what this said, again, is that sellers were in control of this market. We're understanding the story of what's going on behind price so that we could potentially profit from next, the things that happen next, right? So when talking about a pin bar, right, we have price moving to the downside and suddenly a bullish pin bar prints at the bottom of a move. Now, what's interesting about this is that this kind of signals to us as potential investors or traders is that weakness in the market to the sell side has shown itself and that buyers have actually shown some sort of support here or strength to this market, and there's indecision as to whether the market will continue lower. This can be a huge potential signal that markets may be ready to reverse to the upside. Now, is it going to work every single time? No, it's not. But nothing is going to be perfect when coming to trading, right? This can give us an edge or a probability of being correct in which way the market may be headed next. Now, similarly, we have a bearish pin bar, and I've created an example right here. So essentially we have a similar story. Here is our open, right? And price moved all the way up. So we saw bullish pressure start out the day or the bar or the 4-hour chart, whatever you're looking at. And quickly though, sellers stepped in and pushed price all the way back down. And not only that, they actually ended up closing the bar lower. So it was actually a red candlestick overall. Now, what's interesting here is that it's a similar structure when talking about the bearish reversal, but it's flipped. So in this case, we have market participants moving price up initially, right? And then suddenly we get a print of a bearish reversal, pin bar, right? And this gives us the indication that price may be ready to reverse. Why? Well, buyers were pushing market environments up and suddenly they failed to continue higher, right? They got rejected here by sellers, and that could potentially mean that the market may be ready to roll over and reverse back down to the downside. So the next candlestick pattern is going to be the 3 white soldiers or 3 black crows pattern. Now this one is very, very interesting because it's going to be a reversal pattern, but it's kind of going to be a little bit later to the party, kind of going to be waiting for a little bit more confirmation than maybe some of the other candlestick patterns. So when talking about the 3 white soldiers, essentially what we have is a market that's moving to the downside, as you can see here with this arrow, and we have 3 bullish bars printed. So again, A market is moving down and suddenly you have these 3 bars moving in a row back the other direction. Now what this shows is that sellers may be exhausted and that buyers may actually have some room to run here. And oftentimes what you'll see is you'll see a continuation of these 3 bars into more bullish movements for this market. Again, similarly, you have the same sort of idea when talking about the bearish side. You have a market that's pushing up and continuously moving higher, and then suddenly you get bam, 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 3 red candles in a row showing some weakness to this bull trend and some strength to the other direction. So now that we know some patterns, how can we actually use these to our advantage? Well, we actually want to combine some patterns with other factors to create higher probability setups. Remember, as traders, we can't guarantee or know which way the market is going, but we can create scenarios where we have higher probability of success. So a lot of times, one of the best ways to use candlestick patterns is actually to combine it with some better context or some other factors that give us a better chance of being correct about market movements and to create higher probability trades for ourselves. So we can combine it things with like support and resistance or a trend using a moving average, right? If price is above the 200 moving average, maybe you buy. And if the price is below the 200-day moving average, you look for sells only. So let's get into some quick examples here about candlestick patterns and how to combine them with some other factors. So example number 1 is going to be a bullish engulfing candlestick pattern example. Now we talked about combining things with other factors, and that's exactly what I want to do here. Again, we have a bullish market. You can see with the moving average moving to the upside, price is moving up. So maybe we want to combine a candlestick reversal with a dominant trend. So again, we have a market moving to the upside and we've pulled back to a level that's going to be interesting. Remember, we talked about using multiple levels to create higher probability trades, right? Multiple factors of confluence to give us a better opportunity. And one thing that we see here is that we see a nice market structure of support at this range down below. Now I know that's not perfect, but bear with me here. What we see here next is we see a bullish engulfing candle actually print here and completely reverse the trend. Now, not only did we get that, but we actually had some nice push to the upside and continuation of this market. So we combined 2 really main things, right? We have a pullback in a major uptrend, and we're combining it at a structural level of value or support zone here at the bottom, where we saw buyers continuously pushing price up, and we had a nice bullish engulfing candlestick pattern right here that gave us confirmation that price was likely ready to go higher. And as you can see, we did rally, continued from that point and made a nice trade there. Example number 2, we have a really nice example of a bearish pin bar. Again, respecting the overall trend, we have our 200-day moving average here. You can see price moving to the downside, and we had a movement to the upside, right? A reversal or a retrace in this downtrend. You can see price initially was moving to the downside. We've retraced a little bit, and look what we get here right at this 200-day moving average. Now, this is nice because we have 2 main factors here, right? We have a nice pin bar to the downside combined with that 200-day moving average. So when you combine those 2 factors, you could probably assume that there's going to be a good bit of sell pressure in this market at that point. So remember, we had 2 factors. We have our moving average combined with a nice pin bar reversal. This could have been a great trade setup. And again, we saw a nice rally to the downside as sellers took control back of this market. Example number 3 gives us a couple opportunities to look at what's going on here in the market. But initially, we're going to talk about the 3 red crows that printed twice in this setup, right? So again, we have the overall trend to the downside, which is a positive, and we get right here, you see a minor retracement. So price is moving up and we get, there it is, bam, bam, bam. 3 reds in a row. This is a strong indication of a 3 red crows setup, right? And what you can see is we saw continuation down. Now, just a side note, remember, we want to usually stick to the trend, but I did want to point out that this is a nice example of a bullish pin bar, or I'm sorry, a bullish engulfing as well. And right there, you can see a bullish pin bar printed as well. So kind of a nice little, candlestick pattern setup example here. Now, another red crow comes over here, right? We have 3 red crows right here as well, right? So we got a minor retracement in this overall trend. We had a pullback and we found 3 red crows printing there, which showed some continuation to the downside. So again, nothing is going to be perfect, not even candlestick patterns, and there's no guarantees of success by using a candlestick setup. However, it can be used to increase the overall success rate of our strategies, and incorporating these sorts of things in our trading strategies can give us a better chance of overall success. They can be very powerful if you combine them with other factors, like we mentioned, support and resistance, maybe Fibonacci retracements, you have trend, all of that sort of stuff can come into play together to create higher probability trade setups that can give you an edge in the market. And finally, I want to invite you to subscribe to the channel if you are new here and you enjoyed this. If this was helpful to you, make sure you subscribe to the channel and also give this video a thumbs up. I also want to invite you to check out the other videos that I have on candlestick patterns that are a little bit more in depth, talking about take profits, stop losses, all that sort of good stuff, and some basic trading strategies that you could actually use using candlestick patterns. So go ahead and dive deeper if you would like. You can click one of these videos. I'll pop them up on the screen so that you can go ahead and click into one of those. There's going to be some specific strategies and all sorts of good content in there, so I hope to see you over there. Thanks so much, guys, for watching the video, and we'll catch you on the next one.